everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And today, you guys, we are going to break through the FUD. I'm going to start with FUD. For those of you who have never heard that acronym, it stands for fear, uncertainty, and doubt. Man, there is so much negativity around mortgages, amount rate, and rates. We're gonna try to turn the FUD into fun. So if you find yourself in a position right now where you're having some fear, uncertainty, or doubt, Brian is going to kick us off and talk about a story that's happening right now with his clients who are carving through all the noise for a VA purchase they have. Yeah. So the setup here is this is a live fire example of what's happening in the market right now, despite all the other stuff you guys are hearing.
Absolutely. And then the FUD, is it like Elmer FUD?
Yeah, it was.
You wouldn't understand that.
Rabbit hunting
right
season.
Off the bat, I was I don't think I'm old
enough.
They
did rabbit hunting, duck season, rabbit season, duck season, rabbit season.
Yeah.
Oh man.
But it was Elmer FUD.
Elmer FUD. Yeah.
Right.
That's right.
Yeah. But, how could I forget?
Fear, uncertainty, and doubt. So this is a great story, Brian. You know, I love that it's happening right now among all this chaos and noise in the news headlines, especially economically. So, tell us what's going on. Kind of set the stage for us today.
Yeah, so we're finishing here, getting ready to help out a family that's going to be purchasing a house over in Hawaii. And just this last week, I was terrified for them with all the tsunami stuff. I called them right away. Are you okay? They had just gone over to Hawaii because they're going to be doing the signing over there. Yeah, and I was like, Lloyd, are you okay? He's like, yeah, we were by the beach, and then they told us to kind of come inside. But he's so nonchalant about it. He was so calm about it. I was like, bro, I'm over here worried. Is your house even gonna be there by the time we close? But short story long. We this is his second purchase, and he's purchasing with his sister-in-law. His wife is actually going to be moving out to Hawaii to live with a sister. Lloyd, our client, is staying here in San Diego. He's stationed here. He currently owns a property with his VA off the bat, and that's where I'm going to get it started. The biggest thing that I asked him was, what was their guys' biggest barrier to entry? What was the obstacles that you thought that was going to get in the way of buying this house? His reply was, we thought buying another house would be not possible because we already own one. We thought joint dual VA was not possible, but with further research and guidance, we pushed towards that. And exactly, the first time I talked to him, we're like, hey, I'm buying a house with my sister-in-law. I already have one. Is that something we can do? Right off the bat, we said, yes, there's a certain calculation we use to be able to use both of you guys' entitlement and be able to, make sure that you guys come into the property. The great thing was that they came into the property with no money out of pocket, no down payment for, filling the gap between, the entitlement and all that. So that was really, really, really neat for them. And then I asked them.
So how was that possible?
Yeah, I would say, let me ask you a question real quick, because most people don't know what you're talking about. So cool. Let's actually pause. That's the story, because I know there's more coming, but explain to people who don't understand what you just said. How does that even work? Because most people think, oh, well, let's go upstream. Even another problem. How many times have you guys heard someone say, oh, I heard I can only use my VA entitlement once?
100 times. 100 times.
Let alone have it in place on one property and then be able to still use it on another one at the same time for dual entitlement. Let's unpack that for people. Thank
you for slowing me down on that one. So the way that it works is let's say for easy examples, right? A service member has an entitlement, and if they're going to purchase a house for, let's say, $500,000, they now have $500,000 tied down. Then they want to go ahead and purchase another property. Let's say for easy math, that property is worth $1 million. Now there's a $500 gap in between. $500,000 gap in between, yes. A lot of people think, damn, I need to bridge that $500,000 to be able to come in with the property. I'm never going to afford this. You actually only need to come in with 25% of that gap if you don't have enough entitlement. In this instance, since the sister-in-law also military, she had her full entitlement. He only had part of his entitlement, so the VA is able to utilize hers and his and match it together to not be able to just utilize him and then have that gap in between. So he actually went in second position, and the sister went in first position on that loan. Therefore, that allowed them to use the entitlement of the sister-in-law more than Lloyd's and not be able to come in with the gap. So they literally just bought the property 0% down, and the great thing was they got all their closing costs paid for as well.
That's pretty cool. So in this case, since Lloyd's already been using his VA entitlement, he only has $500,000 left. And that's when the county loan limits, because as of 2020 with VA, there is no county loan limit, right? The only time that comes into play is if you actually have a property and you're currently using your VA, right? So in this case, if they're buying in Hawaii, there is a county loan limit that you go. So the gap in this case, it's at $500,000. what's cool about that is since the sister already has her full entitlement, the VA is able to adjust, making it where Lloyd doesn't have to be 50-50. We can use more of somebody's entitlement and some of the other person in order to bridge that gap to avoid any down payment. And that's very clever.
And I know a lot of people, they just don't know this.
No.
They don't know about it, or they've never heard. And if you have heard, it seems like this out of reach thing, but it really
Absolutely.
isn't.
And the fact that he's a non-occupant co-borrower, that's the other challenge to this. You know, that is something that is very common in the FHA, the conventional world, but in the VA, it's not something that you see because the non-occupant co-borrower usually comes as a civilian, somebody who did not serve in the military, and therefore they're required to bridge that $500,000 gap, which is 25%, and your math is?
Yeah. 125,000.
There you go.
Thank you,
Yeah.
Andy.
See, so that's where the civilian has to come up with that difference in order to be. So you do not have to be a veteran or active serviceman or woman to actually qualify for a VA. You just have to bridge that gap of the 25% that the VA guarantees.
Yeah. And the reason I wanted to make sure we explain this is so that there's clarity, but also, you know, people commonly come to us where there's a barrier for entry in their mind or their understanding or even their awareness. Like they didn't know something they could do. They were like, oh, no, you can do this. They go, oh, wow, really? And so sometimes even not knowing is a barrier to entry. I know we have the common barriers to entry, like income issues with if it's affordability with debt to income ratio, or if it's credit score, things like that. It could be debt needing to be paid off. Like that's that too. But like I wanted to make sure that it's clear that it's sometimes programs might feel like they have barriers to entry and they might not. That was the thing that when you were telling me this the other day, I was like, dude, we have to talk about this.
Yeah. The other thing that I love, Brian, that you're sharing this is the examples, right? We usually do like a first-time home buyer seminar. Come over here. We're talking about the myths. This is actually something that's going on. This is live. We're in the trench right now, and you're working through this, and you made it happen, which is, I think it's great for most listeners whom are veterans who are also active, and because they're PCSing usually almost every 3 years, you know, it gives them more insight and knowledge to be able to say, oh, this is a good aha moment.
Yeah.
And I think that's the most important part to take away from this, that it's like they have a lot more options than what they feel they do.
That's it.
And it's not until they ask the questions or just align themselves in the position to be able to, hey, get that right information or, you know, have the right team behind them, where in this case, we're able to guide them to being able to buy their second house.
You know, I like that word that you just say, options, because a lot of times when we're going through the process, we feel there is none.
Yeah.
Right? But it's not until you actually combine forces with the right people that those options open up all of a sudden. There's creativity that goes behind it, right? And so nothing against banks. I mean, banks are great. You got your Navy Federal Credit Union. But when you talk to that person is really doesn't have the knowledge of how to be creative with these things. They're going to say like, oh, okay, let me go back and ask. Kind of like going like when you go buy new shoes. Oh, I think I need a size 12 or 11, right? And they kind of measure your foot, and then they go back to the room and let me see what's going to fit.
Yeah.
So that's how I feel like it feels when you go to like a Navy Federal or USAA. Yeah, they provide probably great service. Not talking down at them or anything, but is this they have to go back to the warehouse to figure it out, and that warehouse happens to be the actual underwriter, whoever really knows their
to
guidelines.
see if they can actually
And
move forward.
that's it.
Yeah.
They can also very easily get stuck in their product box. Like they just have what they have. They don't have anything outside of that, and there's not any options other than, hey, I have this to offer you.
Yeah.
And again, not bad. It's just that it's limited in some cases.
It's limited.
And so that's actually a great segue because, you know, we had the barriers to entry in this case, but then there's also the things that keep people up at night. And I know it's something we had talked about earlier this week as a team, like, you know, what is keeping people up at night? So in this case, I know I'd asked you to prep, like what was like riding on them and like dominating their mind space when they're going through this process?
So one of the biggest things that came up was appraisal really worried them. And just to give you guys a little bit of context, on a previous deal that I believe we talked about last week, an appraisal came in $9,000 below. And on the remarks, it said value came in maybe because of the credits that were, you know, trying to be given in that seller concession. So right off the bat, Lloyd's biggest fear was like, appraisal got me really worried about it, because what if things don't come in at value. I don't get the credits, or things that need to be fixed don't get fixed. So that was what was weighing on their head, the biggest, because the comps were, they were there, but they weren't like the strongest comps to support that 980 purchase price, which they bought at. But that was his biggest worry. And then when we got the appraisal back, the value came in, and then they were able to keep their full $20,000 in seller credits that they got, and that helped cover all their closing costs. And I believe he even got $500 back.
Got it.
Wow.
So it was a money situation in this case.
Yeah.
Sure.
And I know that you mentioned no money down, and that's another misconception that veterans have, or active servicemen. They always think, well, it says no money down.
Well, there's no money down, not
There's
money
no
in.
money out of pocket is where
Yeah.
they get you. There's no
Yeah.
money out of pocket. There's money out of pocket, but there's no money down.
Correct.
Yeah.
So that's what we want to clarify, right? Is we want people to understand, you're right, there is no money down, right? Every transaction is going to be pertaining to who you are, what you've done, what you're using. For instance, if you used your VA in the past, there may be money down that's needed. That's a guideline that we have to all, follow. The other thing is, most people don't understand closing costs, and they think, hey, there's just no closing costs, so I don't have to pay for those. Yeah. No. The thing is, whenever you go with conventional, FHA, fix and flip, ground up construction, everything has closing costs. Everything requires title. Everything there's an impound account for your property taxes, for your insurance. So therefore, there's closing costs, and those are the responsibility of buyer. It doesn't matter what type of buyer. It's straight across the board for everyone. This case for Lauren, he got a great Lloyd. Okay, Lloyd. He got a great deal. He got a great a realtor that negotiated, that understood how to negotiate in behalf of him. And he got a great deal. $20,000 in closing costs. Appraisal came in. We're good.
Yeah, luckily, he's a repeat buyer, and he knew going into the transaction that he was going to ask for credits, because they did have money in the bank. But he's like, I know that I want to make certain repairs, certain things that I want to buy after that. So if I can get credits right now, let me just ask for them, and whatever I get, obviously I'm winning. He's like, I want to come out no money out of pocket, but if I have to pay some stuff, like, all right, whatever. But he was just happy that the value came in, no money out of pocket. So now they have a little bit of an extra budget to go and do some things around the house.
I like that. The whole credit, like, what's the worst that's going to happen, Brian?
Oh, nothing. And that brings me to another point. I was just talking to another realtor, and we agreed, hey, just ask for whatever's within reason. And guess what? The worst thing that could happen is they counter back with what they'll give you. And at that point, anything that they give you is a win.
That's it.
So I'm like, ask ferociously, but also be very careful with what you do.
And this is really important, though, because even though it's in this context that the appraisal might have been a worry, I think that's kind of happening in more situations than we're admitting.
Yes.
And I don't mean that falsifying. I mean, I think that people aren't admitting this. They're not verbalizing in the back of their mind, oh, I'm worried about this appraisal. I see a lot of inventory coming. I see that these houses have been on the market a lot longer. So I don't know how legitimate that is. What would you guys say now? Where do you think we find ourselves in that space?
Absolutely, Andy. You're onto something right there. You just said the key word. There's more inventory coming up. When there's more inventory coming up, guess what happens?
The prices soften.
That's it. And that's just common. It's simple economics, right? Something I learned in Economics 101 when I went to college. I did go to college a couple of years, but I was there. But it's Economics 101, right? It's simple economics, supply and demand. When there's a lot more supply, there's more options, so buyers feel like, hey, this thing's going to sit in the shelves for a while. And so let me just wait and see how many days that's going to take. And then the longer it stays on the market, the seller starts playing these mental games like, I need to get to that other property. Or I need to just get this thing done.
So do you guys do you guys think that sellers and buyers alike should be worried about appraisals right now?
Yes.
Okay, what's behind that? Is it just, I'm saying the inventory thing.
Because of the inventory, of course, that's it. There's less buyers that are. We're talking about this. Just brings up everything, the whole economic situation that we're in. We're into the least affordability there has been. And so therefore buyers are a commodity right now. It's no longer the seller's market. This is becoming a changing market in the advantage for buyers. And when that happens, sorry, I get so passionate, but that's what's happening right now. Right now, we just got 3 Tidewaters. 3 Tidewaters. We're in a purchase for $295. It came in, lower than expected, actually $12,000. We have another one in Tennessee. It was a $420,000. The appraiser said it was going to hit Tidewater. It actually just hit Tidewater for $1,000.
Oh, wow.
So for people who've never heard that term, explain what Tidewater means.
It's for veterans. It's for a VA loan in which the value is not going to meet the purchase price. Okay, what's been agreed to. And in that case, what happens is we get a 72-hour to rebuttal that. They don't tell us what the value is going to come in, but they give us the opportunity to justify what that sales price is. So at that point in time, we reach out to the listing agent because they're the ones that suggested to the seller, we're going to put this house at this price. Right. And so therefore, we go to the listing agent and support those comparables. You know, give us that information. They have to put in a grid and we send it back to the appraiser. The appraiser then looks at that and says, oh, maybe I missed a comparable and I think maybe I can replace it with this. Yeah. So in one of the cases where the 12,000 came in, the appraiser actually used 2 of those comparables and still hit tidewater.
Wow.
Yeah. So that's just to tell you the market is shifting in some areas. I'm not saying everywhere. You go to New York, it doesn't matter. The homes are still selling. You still here in San Diego, some properties are still selling.
Yeah, like it's locational.
Very, very, exactly. So those are the things that just happen. And we're seeing more of that. Wherever there's more inventory, Texas, Arizona, Florida, we're starting to see that. We're starting to see a little more of the pushback. It's just what it is. It's the market is now starting to talk to us.
Okay.
You know, that ties in perfectly with, you know, one of the most important questions he asked that, you know, brought him clarity, because his question was, well, Brian, what if the appraisal doesn't come in at value? Then what? And that's exactly why I explained to him, you have a process where you're able to rebuttal the value and then, you know, give back comparables so then the appraiser could review and see if they can raise the value. And that was basically, you know, his biggest thing. Like, okay, so what happens? Then that happened. And he's like, then what about the expenses that I got to pay for the closing costs? I'm like, bro, if the value comes in, you got the credit, you're good. And, for him, it was just having that confidence and, you know, knowing that he's making the right decision, which I think I believe it's our duty to give that confidence to our clients to let them know that, hey, they're making the right choice and they're going to get in their house that they want.
And Brian, I'm glad you brought that up. But why do we feel that way right now? Because of everything that we do behind the scenes. We know our markets. We understand it. We see the data. So we're like, no, dude, we'll go to the realtor, negotiate that. What are you going to do? Just go, dude. Like, here's the data, right?
Like, it's so easy to present. And then another example, what you brought up, you know, houses staying in the market a lot longer. We just opened up an escrow up in Lake Elsinore. The house has been on the market for 50 plus days. 4th realtor that has listed the property. And, realtor got in there, negotiated very aggressively, got all closing costs paid, including escrows, including transfer taxes, plus an additional $18,000 and a 3% commission. And the reason being was because he communicated what the buyer's needs were, asked what the seller's needs was, and then said, where can we meet in the middle so that we all leave this transaction winning? Damn. And I think those are the conversations that need to be happening inside the negotiations, where it's just straight up.
So, okay, and I know I started with the whole acronym of FUD, but this is why I was asking you guys to talk about this today, is there's these situations that are actually still happening in the market. And people think on the other side of the screen, oh, yeah, that's just someone else's story. No. But the people that you're talking about right now, they thought that at one point.
Yeah.
Oh, that's someone else's story. That's someone else's deal. That's some other place that they're looking at. But having a real life example really helps, because there's still sellers that need to sell.
Yeah.
Please remember that it's not just sellers wanting to sell. There's sellers who need to sell. They're either upsizing, downsizing, they're moving out of town. And look, I've heard cases even recently of people like, we have to sell my parents' house because they're going into a retirement home, or they're going into long-term care or dementia care. Like, that's going to trigger a sale because the family has chosen, we're not going to hold the house and be able to pay for that care unless we get the money from the equity of the share of the house.
Yeah.
So that breeds possibilities that maybe you're just not thinking of. So whether it's the barriers, it's the questions you have, it's the things that keep you up at night, like, to ask the question, step up to the plate and take a swing.
I just think the fear, Andy, where it comes from is they just don't want to be repeat offenders, right? They hear all these stories. They see what the market was a few months ago when there was, things just couldn't, houses would sell like if things were in the shelf and it was so affordable. Yeah. You know, people would just snag these things up. And so now you got the ones that are, man, the payments gotten higher because the interest rates have gotten higher. I got that fear because I remember my parents going through what they went through back in the mortgage meltdown. Is that something that could happen to me? You know, and so a lot of times that lack of understanding, because they were little young bambinos like, you know, Brian were, they didn't understand that situation. They just saw, you know, what their parents went through, or in some parents actually split up because of the financial situations. So they don't want to be that repeat offender.
Yeah.
You know, and therefore they're being more cautious and they're asking better questions so that they avoid that situation, you know? And so I think it's very good for them to do that, especially with so much information that's out there. It's like really prepare yourself to get a team together, a team that's going to help you meet that goal, achieve that dream of that you're able to get this thing done.
Yeah.
We're just here, Brian, and ourselves, we're just here to inspire people, encourage them that based off we reviewed all your financials, you are in a position to win, to take advantage, to get into what you need to. And then there is an exit strategy with this, with the whole cliche, don't marry the rate, marry the home.
Yeah.
It's a true cliche.
Yeah.
You know, it's like we already know what goes up. I keep going into these things, goes up, must come down. Rates will go down. We already saw that. Jerome, Uncle Powell, you know, he's got less than a year now left.
Yeah, that whole thing and that conversation with rates. I mean, I think we're going to enter into a fall season where rates are going to be a lot more favorable, and I'm thinking that that's going to bring people off the sidelines, which is why I'm emphasizing today, especially if you have fear, uncertainty, and doubt in your life right now about being a homeowner or buying a home in this environment. I want you to hear these kinds of stories and know that on the front lines of that, people are successfully closing escrows. I mean, let's just have a quick check. Do you have more escrows right now than you did in July?
Yes.
And more escrows now than you did in June?
Yes.
Okay, so people are buying. There's like twice as many escrows in open right now than there are, because I see the board every day.
Yeah.
That's way more deals than there were, and you guys already had deals going on.
Yeah. You know, I think a lot has to do, and I say this with conviction, is we're learning to provide the proper information and speak to the clients with reason.
Yeah.
Full transparency. Full transparency just helps them see it on paper, like, okay, that's where I'm at. And then when you're able to talk to them and show them the data of where the rates will be going, it's like, okay, this is temporary. I've been there. And then let me just tell you something, Brian. When your kids buy a home and they need to finance it, do you think, and how old are they right now?
2 and 3.
2 and 3. When they turn 20, 21, I know I bought my first home when I was 26. Tanya was 22 or 23. You know, when they're 22, 23, do you think it's going to be easier for them and they'll be more capable of purchasing a home than they will today?
Well, if dad gets his shit together, they won't have to worry about that. No, but to answer the question, it's going to be a lot more expensive. I mean, you just look at back when you bought a house. Is it more expensive now? Oh,
Absolutely.
So we have to do the work now and prepare them now, because if they don't know that later, then we're just feeding them right into the
exactly. And what I'm going with this is legacies are built today.
Yeah.
Legacies are built today. If you don't build it today and you don't focus on today, tomorrow may never come.
Yeah.
And you're not going to really set anybody up for success on that.
I think that is a super fair question. It might
100%.
seem very pointed and very sharp to some of you listening, but it's a very pointed question, because if you're choosing to sidestep the responsibility of setting up legacy, then that's your choice.
Yeah.
You're going to live with that choice just as much as you are saying yes to it and then creating that path that might be rocky here and there. It's just economically rocky. This is our 20th year talking about mortgages, being in this industry. There are good times in mortgage and real estate, and there's tough times in mortgage and real estate.
There
and you
always will
learn through both of them, but you learn more through the hard times. And then we can sit here 20 years with the rearview mirror and go, hey, there's some things that are true because they're true because we're old men.
Yeah.
Any business goes through seasons. Look, we're going through tsunami warnings now.
Yeah. But, lastly, to tie it in, for Lloyd's story, and I wanted to bring back what Will said, it is our job to influence, to motivate, but at the same time, bring the clarity. Yeah. So, I asked him, like, in your eyes, what was the solution that we were able to provide for you? He mentioned, you helped me clear up my mind by asking me the questions about the house, the rate, and all the thoughts and possibilities that could be done. His question was like, I want my rate to be the lowest. I'm like, Lloyd, don't worry about that. You're going to get into your house. The good thing is in 6 to 8 months from when you make your first payment, 210 days, you'll be able to refinance using your VA IRRRL interest rate reduction loan and just simply bring your rate down. And he's like, and before that I asked him, like, you did that to your other property, right? He's like, what is that? I'm like, what?
Oh, shoot. He didn't know.
Reminders.
So right off the bat, another flashlight, another light bulb lit up in his head. He's like, oh, I didn't know I could do that. I'm going to do that to my other house too. And I'm like, that's exactly why when we talk and we have these conversations, it's my job to let you know what all those possibilities could be and know that you can make that happen. You just have to align yourself.
That's one of those unknown barriers I was talking about. Like if you don't know and you're like, that's blocking you from something. That,
I had to
crazy.
stop and kind of like break down what the VA IRRRL was. I was like,
You had gotta shake
hold
them
on.
up.
Yeah, I'm like,
Shake 'em a
Floyd.
little
Wow,
bit.
that's
You know,
awesome. But how cool that you're able to do that. Like,
It
Yeah.
feels great.
And to me, Brian, that's encouraging.
Yeah.
That's encouraging because you've already done it once.
Yeah.
Now you're bringing them back to reality. Like, hey, you're shaking them. Like, remember?
like you took it.
You know, history does repeat it. I mean, success does repeat. You can make it repeatable. In this case, we're gonna make it repeatable.
Yeah.
It's just right now, you got to become frugal. You know, go to the value meal section. You know, for a while. I know I did it, but I had a $1 menu meal.
I love it. He got it.
A
He
$1
did it.
menu.
He did it. He
right
changed it.
in my times. So I just gave out my age. And we just became frugal. And next thing you know, it's like, oh, here we go. We're taking trips again.
Yeah.
We're going on these
Yes.
things. I don't have to be, oh, what? There's a newer house over there for $550,000. My first house was $242,000, I remember. Right? And then a year later, I got too comfortable. It's like, Tanya, there's a new bill, $550,000. Let's do that. And I remember buying actually the condo in downtown. You remember in front of Petco Park before it was all that?
Before they put the wall with the scoreboard up
There
and
you
blocked
go.
the view.
Exactly. Block my view. I was in the 6th floor thinking, look, Tanya, that's our balcony.
We can watch
games
the
from
game
here."
from here.
And then they sectioned it off with the scoreboard right there. And then after that, we got, it was like hooked on phonics. You wouldn't understand that, but hooked on phonics
Oh
was
my
a thing.
gosh,
Write
dude!
it
With these
down.
old references, what are we doing, man?
Yeah.
I got a lot to research this
And then we
weekend.
went to that new build, right? That new build, and that's when we actually moved. And you don't remember. It was maybe you remember so over here, but the family room was like a football field for Gian, Devin, and Christian.
Yeah.
I remember just seeing dents on the walls because they would hit each other and throw each other.
Tackle
to the
each
wall.
other.
It was funny.
Oh my gosh.
But anyways,
That's a beautiful
point. Being is, you'll get used to it. You know, you just have to start. If you start again, like I mentioned, start your legacy today. A legacy is built once you form that decision of I must. Not, oh, when I'm going to do it. You must do it today. If you're in a position that you could afford it and I gave you an approval, start searching. Get in there now. I already, for a fact, I know things are going to be more difficult as we move forward.
You know, something I want to make sure I mention too is that if you're watching this episode or you're in this section of the conversation, you know, if you are feeling that there's barriers to entry that you don't have an answer to, I want you to comment. I want you to reach out to us and admit what they are. Share with us what they are. Take a moment of vulnerability and be like, hey, I think I have this barrier to entry. Like, ask us the question that you have on your mind. Tell us about the thing that's keeping you up late at night. Our job is not to just make you feel comfortable unnecessarily, but to instill your confidence in what's true about your scenario.
Ooh,
There's
I
a
like that.
really big difference between that. And I think that gets muddied with marketing. I think that gets muddied with slick talk. That gets muddied with a lot of people trying to like maneuver their way into just closing deals versus giving people the keys to their house.
It gives you FUD.
100%. And so if there is something that you've been like wanting to ask that you haven't, this is the time to ask. If there's something that you have been been stopped by, whether it's your credit, your income, or whatever, like let's put all the pieces on the table and let's figure out the jigsaw together. Because on the end of this story, Brian, like you're talking about, there were questions that they asked, but there's solutions for them as well. And then in the conversation, finding out there's even a financial solution for him on the other home that he owns that could maybe help him save money as well, that he just, again, wasn't aware of. Yeah. And I can't tell you how many times over 20 years we've seen this. Like all this, I didn't know I could use my VA more than once. I didn't know that there was a thing such a thing as dual entitlement. I didn't know about the VA IRRRL. There's a streamlined process to reduce my rate and save money. Or people don't even know that it's required for you to save money to do it. Like it's a built-in safety mechanism that you have to save a certain percentage of your monthly payment to do it.
And the cool thing about this right now, Andy, is that we are giving a true scenario.
Oh yeah.
So that's even way better. Like,
well, right.
This is live.
Yeah, you can do that, but like this is like, how did we do that?
Yeah.
Now we showed the how, which is a lot different than saying that, yeah, you can do that. Well, here's a how.
This living proof.
We can hypothesize about things all day long, but like that, the reason we kind of like did this approach angle today is like this is happening in this market right now, despite all the other stuff you're hearing.
Yeah.
I can't tell you guys in managing this show with you, preparing shows to do with you, and then watching and surveying the other content landscape. There are so many people that are just sowing fear and doubt, and they're just sowing that everything's going to collapse, and they're just sowing catastrophe. And that is going to for people who are going to listen to that and give weight to that word, they're just going to rent forever.
Yeah.
People who are willing to carve through that and go, wait a minute, how do I get a piece of the homeowner landscape for themselves? They're going to end up getting it because that fortitude and that tenacity matched with actual solutions is what's closing escrows.
Yeah. You know what we're going to do, Andy? We're going to make a sticker and we're going to put FUD, the whole circle, and
no
dash
FUD.
That's
No
it.
FUD.
None.
Yeah.
It's not
No
here.
FUD.
Because that's one thing we're going to remove is that fear, the uncertainty, and the doubt.
Yeah.
Why? How are we going to do that? By providing you compelling evidence and data for them to make the best decision possible.
I love that.
That's what we do.
I'm gonna when we close this show, I'm gonna go and make a design right
That's
now.
it.
No
Chat
FUD.
GPT.
No FUD. No, I said I'm gonna go make
Chat GPT. Deal.
GPT. Uncle Andy's gonna go
No,
make
but
it.
you know what I was thinking is that a lot of people follow the herd when they see certain things, like on social media when trends happen for a video, a dancing video, a challenge, a diet, whatever it might be. They don't show these types of examples. They don't show these types of stories where people are going through these themselves. This is not the only person that's going through the situation. No. But the more that we share this, the more that we give people real life examples, and people could see themselves in those examples or are living those problems, obstacles. They have the solution here, and they can also do it. You just have to find the people, align yourself, and don't be afraid to ask. Don't be afraid to ask.
Well,
just go for it.
What I like about this, what you did, Brian, and it was very clever, is you're walking us through a journey, an actual journey. It's kind of like when you go to the DIY shows and you're seeing the whole fix and flip. Yeah, they just show the pretty things, but there's those fun ones that really show like, damn, we weren't expecting this. We weren't expecting that, but you were able to get us to bypass that because of what you did. You found the solution. That's how I feel that we are. We're that contractor. We're that person that's looking at things and we're figuring out ways, the solutions to identify and how to not bypass, but just make sure we find that solution to that situation that comes up.
And I'm just grateful that I'm surrounded by a team that's able to help me to find those solutions, because I know alone I wouldn't be able to do it. It takes, a team to get a championship, and that's what I'm very grateful for.
Like that. Yeah. I like that.
Yeah. This is such a good conversation today, guys. We're going to close here. There was something else I was going to bring to the table. I'm not even going to keep, we're going to keep it for another time. This just needs to be all about this. Yeah. I like the no FUD thing. In fact, I have a whole brand new idea for a series that we can just do about what people's fears were, what their uncertainties were, what their doubts were, and then how they were able to overcome those.
FUD or no FUD.
I think
I like it.
I think that's great.
This is what people want. Yeah. This is what people are really looking for. Is like, bring me in the journey of somebody is going through it. If we could record it, obviously we could, but we're not,
we're not
Mod or Netflix, but at least here you can hear it, while we're doing it.
Hey, you know what I heard? You said Netflix. I mean, Netflix, you only have real estate shows. Like, when are you going to get a mortgage one?
Yeah.
Dude. Oh, jeez.
Yeah.
Oh,
Maybe you're onto something here. You know what I mean?
We
could show the journey, because it's true. These people, we got to remember, we're putting people in the biggest debt of their lives.
With the smile,
and we're hoping at the end of the end of the transaction, there's a big smile and there's a big gratitude for it. And honestly, all we look for is share your experience by just giving us a review, by sharing people how you felt while we actually brought you through that journey of things.
One of the most,
because it is stressful.
Well, it is.
It's a big deal.
It is. One of the most meaningful things that one of the clients mentioned towards the end was, we can't wait till we get our key so we could tell everybody about the experience.
Oh, that's super cool.
And then I was just like, that right there is why we do this. Like, that exactly there. I'm like, thank you.
Yeah.
That's
so rad.
The thing is, I know I keep making it about me right now, but I've been doing this 20 years, and, we wear our hearts on our sleeves. And, the whole, as you get older, you get wiser, you start learning to pay attention. You start learning to understand what the client's needs are, and you got to be that soundboard to help them navigate through that and take that whole FUD away from that, And so that's who we are. That's what we represent. And that's what we bring people through this journey in hope. So when things are going sideways, they're not the only ones that are stressed. Yeah. We get stressed.
We take it seriously that we're helping you with something that matters to you.
That's it.
And it's funny that I'm having this response as we're talking about this, but in an unrelated, completely different interview I was on 2 weeks ago, one of the things I was talking about is I found you in the middle of a situation where you needed help. And I was able to give you that help and bring you along to the place you were telling me you wanted to be because I already knew how to get there.
Yeah.
And in so many cases, that's exactly what's happening upstairs when you guys are on the phone with people doing Zooms and you're even in-person meetings, is you're finding them in the middle of, I want to go over to this direction. I want to have this thing. I don't know how to get there. I'm hoping you can help me navigate. And you guys just do that so well. And I think that also getting older, there's a sentimental part of me that goes, I love this. And even now that you're a new dad, even though your sons are younger, like I know you love this because that's something that you're going to be able to bestow as an example to them as a father and as a husband as well. That's going to go way beyond the transaction. Yeah. So I'm super proud of you for being a young man doing that, and also becoming more aware and listening and being sentimental and understanding that this journey is going to be hard for some people.
That's how relationships are built in communication. You know, I never realized that, but lucky for me, I've been married for 28 years, and I love my wife more every year that comes, every day. I never understood that, but that's how I feel with my clients. That's how I feel they turn to family, and that's how I want to make them feel. Like, I got your six. I truly do. I wouldn't do that if I was you. And that's the thing that they get with Brian. I show Brian sometimes he has those hard conversations, and I'm like,
hey, I'm going to tell you straight up, and you may not like it, but I'm going to tell you nonetheless.
They think this is going to be a great investment. I hear Brian freaking breaking it down for them. Like, that's just the way it is. It's like, I'd rather hear that than get into something than being regretful for what they got themselves into.
And it's like, it's hard to do, but it's the thing you have to do, because if you lead them down that road, there's nobody else's responsibility besides yours, because it happened on your watch.
Yeah.
And you were the one that were supposed to guide them to where you told them they were going to be safe or successful, and now you didn't. So how do you think that makes the person that's supposed to be the captain feel?
Yeah.
I think that's horrible.
No, good job.
Great job. Great example, Brian. I'm super excited that this is also just one of several that are happening right now. So I want to continue down this path with you guys. Thank you for bringing this to the table today. You guys did a great job. Did you have a favorite part of the show today?
Honestly, just being able to reflect on the clients that we have, the relations that we build with them, and knowing that it's not just about closing the deal, cashing the check, but getting them ready for their next step in life and actually helping them fulfill their goals.
Yeah.
How about you?
My actual favorite part of the show was Brian just asking the right questions, like trying to go through the journey of what an actual buyer feels and what they go through, and identifying that and making it vocal to our viewers. That's my favorite part of it. It's like, thank you for doing that, for just being clever enough to think of a situation of such.
Yeah. My favorite part of the show today is the no FUD design. We're going to make a no FUD logo, and we're going to do a no FUD series. I already have an idea. I'm making an executive decision on camera.
I second that motion.
I'll tell you guys about the details at next week's meeting on our next meeting. But I already have a vision for us as a crew, and each of us individually. It's going to be the No FUD series, and it's going to be a lot of fun. So
it's going to be a lot of fun.
Thank you guys for a great show today. Wonderful being able to talk about all this today, and for all of you who might be joining us for the first time, remember to like this video, subscribe to the channel, and turn on notifications so that you catch every video right when it goes out. And if you have not yet checked out our series called Friends of Mortgage Heroes, we have an entire playlist with our friends in and around real estate, wonderful conversations, a lot of introspection on life in business, in life and in business. And we have some amazing guests coming up who've done some incredible things. I say coming up, like we've had some awesome ones recently too that are just like so outstanding. I've actually watched them like twice. So if you haven't checked that playlist out, go check that out. And if you need help with something, please make sure you reach out to William, reach out to Brian. You can reach out to me as well. We're happy to engage with you in the comments and also give you personalized help along the way. Thank you guys for a great show this week. Thank you all for watching, and we'll see you again with another great show next week. Later.
See ya. If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.